Hello again. Right, so we're going to take a look at where we are with gold and silver and the miners, and also the US dollar, which is quite important to how everything's playing out at the moment. So what we've got here on the screen at the moment is the chart for gold, and you can see that it's been correcting or consolidating quite nicely over the last couple of months or so, since August. Price had risen very steeply and rapidly in a way that's not sustainable in a healthy bull market. You need to see a correction after you've seen that sort of rapid upwards movement in price. It can't just keep on going and keep on going unless there's a major problem with the financial system, which may well happen in the end, but not yet. So what we've got is a couple of clear lines on the chart here. One's a support line and the other one's the resistance line. So this lower line is supporting the price and the top line was providing resistance. So what we can see very clearly as well is that on Friday the price action took us straight up through the resistance line, which constitutes a breakout because we closed the week above that resistance line, so it's a weekly breakout. So that line now, from being at resistance, is support. What I mean by that is that if the price continues to move upwards in the early part of next week, then any retracement will fall back onto that line and the line should provide support. So I can extend the line further forwards into November, for example, which is significant because, of course, we've got the US election in early November, 3rd of November. So price could well now move quite significantly to the upside towards this sort of level around $2,000, sort of a psychological level, somewhere in this zone, just below or around $2,000, and then correct back and sort of end up back down here in the sort of mid 1800s. Could in fact, just looking at the chart, I'm doing this whilst I'm talking to you. I haven't actually pre-planned this video. I'm thinking out loud live, if you like. So bear with me. But I mean, the price could easily go up quite quickly, and it could then let me just get another line. It could then come back down, and it'll probably, it would likely zigzag around rather than coming down in a straight line. But the net effect would be that the price would end up somewhere around here on the 3rd of November, which, just coincidentally looking at it now, is going to give us a double bottom, isn't it? Really, for this correction, if that were to happen, sort of level here. Don't really want it to be solid black like that, so I'll just make it a bit more transparent. I can do that. Okay. So that's a possibility, I suppose. And it wasn't my initial expectation. My initial expectation was for price to react downwards from that resistance line and end up down here on the 3rd of November. So, I mean, either way, this falling wedge is playing a significant role in the price action. But there is a bit of fly in the ointment, I think, because if I'll leave the arrows there and I'll just move the line. It is possible to draw this line differently. I mean, the idea of a resistance line is that wherever you place it, it's acting as resistance, obviously, otherwise it wouldn't be called a resistance line. So it starts off here, and then you've got 1, 2, 3, sort of 4 bounces there. If I just bring the line back down a little bit, you've got 4 price rejections in this zone here on 4 separate days, and you've got another one here, another one here, so that's 6 altogether. So that's showing you that the line is important. But as I say, sometimes you have to take a step back and look at sort of different ways of analysing the chart, and you could conceivably have the line a little bit more like that. Now, I must admit, I'm not entirely sure what the rules are in terms of where you have to start the line. I think traditionally you start the line at the peak, at the top, and then the pattern should sort of retrace and react to a line that's drawn from that top. But we saw a very rapid drop there, and it could be that the first sort of significant point on this move was the price reaction upwards from the support line, and then the next significant sort of resistance came in when it bounced up to here. So you could argue, and I think I've seen someone on Twitter arguing or discussing this point, is that that's more the pattern that we've got, in which case I can get rid of that arrow, and it ends up very similar to my initial expectation, and price, instead of bottoming in that area, so I move this down, it'll bottom down here, which is where I sort of originally expected it to, somewhere in the high 1700s or the low 1800s. And sometimes what you get is sometimes called a false breakdown, where the price spikes down very rapidly, usually within the space of one day, and the same day or the next day, certainly before the end of the week and before you get the weekly close, the price is back within the pattern. So what am I trying to say? What I'm trying to say is that although the initial view is that we've broken out, and indeed when you look at the indicators and you put the indicators on the chart, they look to be supporting continued upward price movement. If I put the stochastic indicator on here, for example, wait for it to load up. So the stochastic indicator has bottomed here and it's moving up quite nicely now, and when it gets into this sort of zone above 80 is when you get it's like a zone. When the stochastic gets into this zone here, it gives the price of the whatever it is you're looking at significant upward momentum. It sort of turbocharges the move. So when you enter that white zone, you're much more likely to get very rapid price movements upwards. And as long as it stays in this sort of high zone, that's where you need it to be to support a very long, sustained, sort of, not necessarily long, but a sustained, significant bullish move. Okay, so we'll move on to silver. Trying to get a bit more evidence here, and silver has been more clearly in a channel rather than a sort of pennant pattern. Pennant pattern being one where the 2 points, the two lines kind of converging, whereas this is more of a channel. The lines are more or less sort of horizontal, not horizontal, more or less perpendicular to each other. So the lines are sort of heading in the same direction at a similar angle. So and you can see clearly on this chart that the silver price, although it's gone up very nicely from, I don't know, 23, whatever it is, 23.70 up to $25.11. It hasn't broken through the upper resistance line. So this is another piece of evidence, perhaps suggestive of the fact that we shouldn't be getting too excited yet. Something else to note is that the support line has been very important here. I'll just get rid of the arrowhead because we don't need it. I'll change the chart there from linear to log, because it's always worth comparing the linear chart and the log chart to see if they're telling you anything different. So I'll put it back onto the linear chart. There we go. You see the silver price sort of bouncing off this rising trend line, and really interesting that it came down into this sort of V shape where the two, the rising trend line and the falling trend line meet. We had a little bit of a false breakdown here by the looks of it, and price is now reacting upwards. And if I put the indicators on here, I'll try the moving average convergence and divergence, the MACD chart indicator, and see how that's looking. And I'll put the stochastic on as well, shall I? Okay, so see what I picked the wrong one there. There's a bit of a lag because I'm recording this video. There's a little bit of a lag with the on the screen. I'm trying to do something that's lagging a little bit. Right, there we go. There's a stochastic going on, hopefully. And what does that add to the picture? Well, it adds quite a lot of bullishness to the picture, actually, because the stochastic is rising quite rapidly, and it's still en route to this sort of white zone here. And you can see what happened last time when the stochastic indicator came up and it got into above the purple zone, into the white zone, above a reading of about 80. The price accelerated rapidly to the upside. So on the face of it, you might conclude that the silver price is going to move rapidly up towards $30–35 with a very rapid breakout. I think if we see a breakout early next week above this resistance line in silver, then that's going to become much clearer to me that this is going to be a very significant upside breakout. Yeah, I mean, it does look to me as though that's what the chart is wanting to do. That's what the chart is wanting to tell us. Go back to the gold chart. If I go back to March and do the same thing in terms of the support line. Bear with me whilst I'm doing this. Okay, so we'll start a line down here, and you can see that gold broke through that particular support line quite some time ago. I'm pretty sure I posted about it at the time, but of course silver hasn't. Silver's in that sense held above its uptrend line from March, where gold hasn't. So okay, so that's all good. Let's look at the miners, and the chart for the GDX looks a lot looks like a lot more like the silver chart. Actually, it's got a lot more in common with the silver chart because it has this downtrending channel, which is a bullish looking formation. When the price hits the top of the channel and then corrects backwards like that, as long as the lower, obviously, as long as the lower support line holds, this more often than not breaks to the upside. And these sort of trading patterns, you can get the statistics on these online as to the percentage of occasions when they break upwards as opposed to downwards. But because we're in a cyclical bull market for precious metals, these patterns are, in my view, going to always sort of resolve upwards. We're building an upwards trending bull market pattern. The main sort of caveat to that is going to be the drop into the 8-year cycle low, which will be much more significant than these consolidation patterns. You can see there's another one here, and you can do this on the gold, silver, and on the gold chart and the silver chart as well, because they form the same sort of patterns. And you see these in the individual miners as well. I've posted over recent days charts in the miners that have these sort of bullish pennant patterns, and that's a pennant there because it has the shape of a pennant as opposed to a channel or a flag, a downtrending flag pattern. The target for the GDX move would be 31 to 45, so that's a move of 14. Add 14 to the breakout if the breakout occurs somewhere here, so 42, that would be 56. Now, of course, I've been keeping an eye on the target in the mid-50s for quite some time now, for very good reason, along with a lot of other people, because the mid-50s would be the end of the sort of measured move that I've been looking out for. Well, not so much the measured move, the reverse symmetry move, I should say. So that sort of zone there would be where I want, that's where I would look to for an end to this initial stage, if you want to call it that, of the uptrend in the miners. So topping out somewhere around, between 52 and 56. And at that point, I'd expect perhaps a bit more of a battle and perhaps a longer consolidation period that reflects what went on here back in 2010 to 2012. Alternatively, of course, we could just keep on going straight up here and then come back down and form a handle, which would take us into the 8-year cycle low. So you could have some kind of move that goes up to here. I'll put an arrowhead on there, and these are just initial suggestions, so you could get some kind of consolidation period here, which then resolves upwards. I'd have to look at Fibonacci extensions to work out just how high would be likely to go before the 8-year cycle low, but I don't know. Let's take the arrow up here, and that is not my target, by the way. That's just an illustration. But into the 8-year cycle low, which would be somewhere, my best estimate would be the second half of 2023, before then continuing to accelerate rapidly into the final sort of bull market highs in the late 2020s. And behind all of this, of course, we've got the US dollar. And those of you that have been watching my videos, my charts over recent months, would have seen my bearish outlook for the dollar. We've got a top here, we've got a top here, and we've got a topping process here, which has been much more sort of long and drawn out than the previous two. And in fact, if you look at them, this was a very rapid spike that came back down rapidly. This one here took its time a little bit more to sort of form a top, and it was more of sort of a drawn out affair rather than straight up and straight down. But when it did turn down, it came down rapidly. And the most recent dollar cycle high, in my view anyway, is there. And what you can see is, I think this first sort of rapid rise and drop in the dollar cycle after we came off the gold standard was exaggerated because of what had just recently happened in the 1970s. But I think we've seen a sort of it's almost like a decaying process here, where over time the amplitude of each wave decreases. What I mean by that is that the distance from the bottom to the top is decreasing, and there are several different ways of visualizing this. I suppose I could show you one of them to sort of visualize, or draw a picture for you to sort of show what I mean. Is that it looks something like this. Just drawing the lines on, so concentrate at the same time as drawing. There we go. So it's kind of like that. So you got a very rapid move up, rapid move down, then a smaller move up and a slightly smaller move down, and then the same thing kind of happening here now. So on that basis, I would be expecting the dollar to follow a similar sort of corrective pattern, bearish pattern, come down as per some of my charts that I've posted in the last couple of days. And if you notice what happened before, so the dollar dropped and it kind of bottomed out initially, reached a sort of a low at around about the point where the previous lows were in 1995. So if that kind of thing happens again, previous lows were around about the 70, 71 mark. So I'd be perhaps looking for the dollar to drop rapidly over the course of, well, this took a couple of years, but that's a pretty rapid drop. Over the next couple of years, into late 2022 or early 2023, and then for the dollar to kind of do what it did here and move upwards for a period of time, and that would tie in with the 8-year cycle low in gold, because as the dollar bounces here, you'd probably expect gold to drop quite significantly. That's what happened back here, of course, in 2008. So we could see the dollar coming back up here and then zigzagging as it has done on the previous two occasions. It's spent this whole period here zigzagging around, up, down, up, down. And in fact, the dollar low was in 2008, and it made a second higher low in 2011, and that's when gold reached its peak. So eventually, I'm expecting the dollar to reach a higher low in the late 2020s, and for gold to peak out or top out at that point before the dollar moves back upwards again. But of more immediate sort of interest is what's happening right now. If we compare the last dollar cycle drop, I'll zoom in here so we can see what happened. So from the low point, trying to sort of, right, there we go. So draw the line from the low, and you can draw a second one as well. It takes into account this spike down here. So like that. And you can see after the dollar reached its peak, it dropped and it hit the bottom of those two support lines, bounced around for, well, how long was it? It was June to December, 6 months or so. Of course, this corrective period so far has been less than that. It's been, if you talk about June or July, I suppose you're talking about the same again, November, December, if we're going to sort of repeat what happened here. But it's a very similar sort of pattern. If I get these lines right, which they're not at the moment, start it from the low point. There you go. You can see that's the upper line. And the lower line, taking into account this little spike here, which causes sort of a gap between the two support lines, which is where we find ourselves sort of trapped at the moment. It won't be until the dollar drops below this lower support line, somewhere around about the 90, well, just above 92, isn't it? So to sort of be certain, once the dollar drops below the 92 level, I'd expect this sort of free fall kind of drop that we saw last time. It fell from 104 down to 91, so a drop of more than 10% in the space of around about 6 months. So by summer next year, if we fell 10%, that would be down to somewhere around about 80, wouldn't it? Just above 80. So that would be my primary expectation. I can't say for certain when the dollar is going to break this line and drop, but I'd be looking for it to drop to somewhere around this sort of level, around or just above 80 by the summer of next year. So I was going to look at much closer in and look at the dollar. In fact, I can go to a chart that I've got on TradingView for the dollar. There it is. DXY. Okay, so this chart is one that I've been following and I've been posting quite frequently. Here we go. So that's the overall dollar cycle. Those highs, each represented by an arc basing or topping formation. If I zoom in to the 1 year time frame, you'll probably recognize this chart if you've been following my Twitter feed. And I thought the this uptrend support line was going to hold, and I thought that we would see the dollar break through this resistance line, head up somewhere towards 95.96 before resuming the downtrend. And that's based on historic action, because following the last dollar cycle top, a similar sort of thing happened. But surprisingly, to me anyway, the dollar's broken down and the MACD's had a bearish cross and all the indicators are heading downwards. So this is where I think we may well see that line now acting as resistance. If I try and draw a trend line on here, the dollar looks as though it wants to drop further, perhaps down to where it was before, somewhere around 92, and then move back up. And the question is going to be whether that line holds the dollar or whether we see the dollar move considerably higher. I think in order to have gold retesting 1800 or even slightly less, then the dollar needs to show some significant strength here. So going later on into October, I think that's quite likely personally. But I'm overall bearish on the dollar, so regardless of any move upwards here into this orange zone, which is a sort of support and resistance zone, and also well, there's horizontal support in there, and I think there's the moving average trend line is coming down. I'd have to check the moving averages, but I think there's a sort of confluence of resistance in this area here, which I've been sort of looking at for a while. So that was where my target was for the dollar. I could be completely wrong, and it could just drop rapidly from here and keep on dropping, but I wouldn't count the dollar out just yet. So I think short term we're going to see precious metals move up and the dollar quite likely to drop a little bit further. But I'd be surprised if that just carried on without seeing the dollar break out here and without seeing gold break down. Something just tells me that we're not done yet with this correction. But buy, hold, and add on weakness is my motto. So if you've been doing that like me, then you'll have been adding on weakness over the last couple of weeks. So whether you reserve a little bit of your dry powder to invest in the hope that we do see silver down at $21-22 or even a little bit less, and gold around the high 1700s or the low 1800s. Well, whether you hold back some money for that, that's entirely up to you. I can't really advise you on that, but just buying, holding, and adding on weakness is a good thing to do during a cyclical bull market that's going to last for many years. So I think that just about wraps up everything I have to say. I mean, the evidence is there that gold and silver are wanting to go considerably higher. Silver needs to break above about $26.50 to make me much more bullish on silver and the miners. I think we will see some up moves during the first part of next week. Also worth mentioning that the Canadian markets are closed, of course, on Monday, so that may play into all of this, of course, with traders unable to enter or exit positions on the Canadian exchanges on Monday. So we'll see how that plays out as well. So that's it for now. And thanks for watching and listening. And if you've got any questions, just post them up and I'll see if I can answer them for you. Thanks for now. Bye-bye.